रिकॉर्डिंग में फिर क्या अपलोड होती है वहाँ पे वेबसाइट?
You can start, ma'am.
Okay, thank you. Good afternoon, everyone, and welcome to RACL Geartech Limited half-year investor conference call. I am Shagun Bajpai, Company Secretary, Compliance Officer of RACL, and I shall be moderator for this call. All the participants may please be informed that this conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on the date of this call. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need any assistance during the conference call, you may post your concerns and queries, if any, in the question answer box available, or may raise your hands in the raise your hands available in the right-hand corner of the screen if you want to speak during the proceedings. Please note that this conference is being recorded. We have today with us the management of RACL Geartech Limited, represented by Mr. Gursharan Singh, Chairman and Managing Director, Mr. Devraj Arya, Director and Chief Financial Officer, and Mr. Prabh Meher Singh, Vice President, Finance and Business Excellence. I now invite Mr. Singh for his opening remarks. Sir.
Thank you, Shagun. So good afternoon, everybody. On behalf of RACL Geartech, I extend a very warm welcome to all of you who have joined on this meeting today. Half-yearly results are already now almost over a month old with you, and they are all available on the website as well and available to all the stakeholders. And I'm sure you all must have gone through it and must have getting a good impression about the company and its performance. And definitely in today's call, we'll first go through the highlights of the Q2. Although it is little late this time because we were traveling out of office, but definitely we'll share with you all the highlights and a complete presentation. Definitely, once you are finished with the presentation, then we can have a question and answer sessions also from you. So now I'll hand over the meeting to Prabh Meher Singh, who will really walk you through to the presentation. Yes, over to you, Prabh.
Yeah, Shagun, am I audible?
Yes.
Yeah. Good afternoon, everyone. I will be presenting the presentation, which will cover this time, since with the results we already shared a financial presentation in terms of the year-on-year, quarter-on-quarter, half-yearly numbers. So this time, as all of you are more updated about the numbers, so we have kept the numbers presentation to be very small, just one slide. But we have tried to cover other aspects of the organization, definitely about the company in brief, and then new updates we have from the projects, what we are working on. And I think there were some questions or expectations from investors, shareholders, to have some pictures or videos of whatever investments have happened recently. So we've tried to put that as well. And also we also have certain pictures or schematics of where actually our parts, the application of the parts, where exactly it is going to what kind of vehicle. So we've tried to cover those data this time in the presentation, and then I will try to cover this in, let's say, 20 minutes, and then we can have question answers as we always do. So I will start. And Shagun, my screen is also visible, right? My PPT?
Yes.
Yeah. So this is an overview. Try to cover in one slide. So most of you know we are established since '87, based out of Delhi. Our corporate office is in Noida. Last year credit rating on the long-term credit was around A-. We are a public listed company and we have one subsidiary, a fully owned subsidiary, which is based in Austria. Revenue last financial year, we did 2.75 billion, which is around 275 crores. And we have around 577 employees as of today on the company roll. We have two manufacturing locations. One is in Noida and the other is in Gajraula, which is our mother plant. We have got one office where all of the heads of departments sit. And we've got 3 warehouses in Europe to take care, since most of you know Europe is a big market for us. So we have a subsidiary, we have 3 warehouses and a couple of employees posted there to support us with after sales operations. Core competencies, gear cutting is definitely our bread and butter, and anything which requires precision machining, can be aluminum machining, steel machining, we do it. We are very good with concurrent engineering, process R&D. This is one of the niche we command. So we sit with the customer with their drawings, try and work with them, making the design more robust, the design more acceptable for mass production orientation, since most of these designs are, let's say, at a inhabitation stage or a initial stage. So we work with them in making the designs more manufacturable. And export logistics handling is one of a key USP or a key differentiator what we give to our customers sitting thousands of kilometers away, and we are very well versed with it. And some technologies, laser welding, laser cutting are core, which not many companies in India are doing with the kind of work we are. We have around 22 active customers and 900 different part numbers, maybe more now. And we are working for parts going in 2-wheelers, passenger cars, commercial trucks, ATVs, off-highway, yeah, so pretty much everywhere. Product range, as I told you, we do gears and shafts, sub-assemblies, transmission items, chassis parts, and some industrial gears. And all our plants are ISO certified, and we are also certified for environment, which is ISO 14000, and ISO 45000 is occupational health, safety and hazard. So that way we are a sustainable organization which takes care of environment, people, and definitely the product quality. This, I think most of you know, but I've still tried to cover it again. So as on last year, so definitely when the year ends, this number will change, but this is 31st March 22. So 68% was exports, 32 was domestic. And for us, as you know, bigger market is Europe. So 55% goes to these countries in Europe, 10% in Asia Pacific, and 3% to North America. And this definitely would change when the year closes 31st March 2023. Yeah, so this I will try to show pictorially. So this is, let's say, in 2-wheelers where our applications of parts are. So we do many engine and clutch gears, and these are going to the product customers. You know, this is a transmission assembly, sub-assembly, yeah, transmission sub-assembly. And this again goes to many of our customers. And this is basically a gearbox of a 2-wheeler, and the complete housing is assembled by the customer and then put it into the vehicle. We do some reduction and transmission gears for scooters. So eventually these are again products day in, day out the company is doing, and just wanted to make you understand where the application of these products are. In agricultural, again, we do transmission gears, basically that become part of the transmission, and we do also some engine gears and other in terms of application side. In passenger cars, what we recently started, you know, the investments which we have made through ZF to our end customers. So this is the parts, how they look like, and their application is into the chassis. Basically, it's a roll control parts for suspension. It is a proprietary item, and some intermediate shafts for a, I will talk about this in the next slide, but this is a new project what we have started. It's a new technology. Not many cars in India have this, maybe abroad. So we are working actively on this product with our customer. This is the ATV, what you call all-terrain vehicle. We make some transmission gears, engine and clutch gears, and we do some balancer shafts as well. On this trucks, MAN is a recent company what we have added to our portfolio along with Scania, and this is some parts we're doing for them. So we're doing axle shafts as well. This again is part of the chassis, and engine is part of transmission, part of engine. On e-mobility, this we already disclosed to you, the e-scooter made by BMW. So we're doing the entire drivetrain, the wheel axle assembly on this. The rear wheel of the vehicle is mounted, and it's a very critical eccentric part to a rotor shaft as well, which connects the drive motor to the drivetrain. So the entire kinematics is done by us, and this is what we recently now started commercial production, in the sense SOP is in 2 months from now. It's a park lock wheel for a 4-wheel car, which is fully electric and hybrid. I mean, both PHEV and battery operated. And this will be also, the supply samples have already gone, and SOP is in a couple of months from start of production is in a couple of months from now. And this is just to give you an indication. Yeah, 3-wheelers is a dying market, but this is a legacy product we have. We do some drive shafts and some transmission gears, and some buses also we're doing engine gears and drive shafts. So this is how the product portfolio looks like. This is the new plant, what we have built in. I think many of you had questions, how does it look? So we could not do a video thing, but I've tried to put a picture or two. So you see, this is how the plant from outside looks like. And this is built in the existing Gajraula plant, because you understand we have ample land there. And this is how the plant looks from inside. This you're seeing many empty spaces. This is still not a recent photo. This is completely filled as of now. Most of the deployments are done. And some key features of this plant is this: basically it's centrally not cooled, but air controlled, so for better airflow. And then this also has a clean room concept, wherein the parts when you make for passenger vehicles, there's a lot of stringentness and consciousness on part cleanliness. So for example, we're not allowed even more than 0.02 mg as a dust on the parts. So we pack the parts in a clean room concept. There you see, here it is. So we make sure that it's free of dust and any atmospheric contamination. It has robotic automations wherever it is required, and entire plant is centrally controlled for quality. So we monitor the process capability through Q-DAS software, which is best in the automotive world, and all processes are controlled through this what you call the statistical process control. Yeah, so this was in terms of the overall, whatever we wanted to share. In financial, we have prepared a small slide for the quarter ending, and just to give a highlight, this all of you know that we did a sales of 90.21 crores overall in Q2, which was 30% higher if you compare year on year, and 12% higher if you compare quarter to quarter. EBITDA or operating profit was 22.85 CR, which was 44% higher as compared to year on year number, and around 29% if you compare to quarter on quarter. Profit before tax again is higher by 34%, so quarter on quarter by 63. This was kind of a best quarter if we can talk in terms of sale. So just to highlight that the export sales was around 65%, domestic sales was 35%. So many of you have asked questions in past, domestic market we're not able to penetrate, but that is not true. We've got many new projects from domestic market as well. Otherwise it's usually 70-30. So this time you see it's around 65-35. So domestic market is equally working good in the second quarter. Margins, I think we had a 25.3% as an operating margin and 14.5% as a net profit, which is, I think, better or best in terms of last few quarters. Definitely, there is some other operating income that adds to this higher margin, but otherwise, in terms of the if we take the sales of 87 crores, which is exclusive the other operating income. So and there, I think we're maintaining around 23%, which is again, given the inflation and other scenarios, pretty good. And we have tried to be constant quarter on quarter. And yeah, as I told, this was the highest quarterly sale ever, and we tend to work towards beating that again in coming quarters. It is the resultant of strong demand from existing customers. Most of our customers are projecting, and we are delivering high numbers because of that. So last quarter, European market, being the market in question, still grew for us. And in India as well, some strong numbers came from some customers. Second is the addition of new customers to the production. Also, since you know that ZF started in terms of in June, July, and now it's Q2 that resulted in higher production and sale value. So we are proud to share that whatever we deployed last year, around 70% of that is being utilized on an average last quarter. And that means that whatever capacities we did install maybe 2-3 years from now, because we installed for 3-year capacity, the customer booked entire capacity in first year of production. So monthly that way is encouraging in terms of utilization of the deployments we have done in last couple of years. So this was on the financial side. I think we still have time. Next, I will cover some key highlights, some new projects, what we have added, and one major project which is under discussion. And then I think we can go to the questions. So this is again from ZF. We have bagged an order for, we cannot name the company for confidentiality, but it is again a luxury car manufacturer in Europe. And actually, this project was under advanced discussions for a year. And this complements the investments or technologies which we have put in. So basically, whatever we are selling to, ZF is selling to customer A, now they are selling to customer B, same products made by us. So this is something which was a highlight. That is why the deployment of resources utilization of capacity is at 70, because this we were not anticipating this project will start so soon, but this started. So we've got this nowhere in our projections, but this is now started this year. Basically, it's a resourcing project. So ZF was making these parts in-house for their other customer, and they were really impressed and confident about the supplies which went in for our new plant. And definitely as a cost advantageousness, they decided to shift the product to us, the other project which they were doing in-house. And you know how energy crisis in Europe is. And you will be very happy to know that this doesn't move so soon, but maybe I think in 9 months they decided, and even sample development happened, and the parts are moved, and the SOP has also started now. This month we will give something, and last month as well. So this talks volume about the investments we have done in past, because it was complementing, since similar parts, similar equipments were needed, since we had deployed capacity for 3 years, 3-year volume. But that peak, whenever it comes, we'll have to reinvest, because this new project has started in. So this has helped us get better utilization immediately on our capacities. We've also bagged an order for a rear steering mechanism, some steering shafts. Basically, you understand today when you drive a car, when you steer a car, only the front wheels move. But now many cars are having rear steering mechanism. They call it an actuator. What that does is that it also makes the back wheels move, let's say 2-3 degrees or 4 degrees. This gives a better turning radius and better handling. So we are working with ZF for Porsche. The car name we cannot divulge, but this intermediate shafts, what we are giving for this steering mechanism. And this again, we feel is a product which will have application in multiple customers. So ZF is confident they will sell this product to more companies, and if that happens, our parts move with them. So this is again a big catch for us. Sample development is underway, and the SOP will start middle of next year. And we've done some deployments to the capacity, some new fixed assets, but not much. We've also bagged one more order from ZF for PMW. It's, I think, on the same project what we are doing. So they added one more part to the kitty. And this is a high volume part for us. It is like the highest for us in terms of our manufacturing scope. So around 700,000 a year we will do. And this is again a new project. Then one more component, resourcing from it. So ZF is a big company, right? So it means what we are doing is we are bidding judicially into the projects which have, let's say, application in electric projects, hybrid cars, so that it's a de-risked for us. And they, have operations in 100 plus countries and maybe, 100 plus plants. 20 plus countries and 100 plus plants. So all plants are making something, then they're buying something. So that is why you see ZF penetrating very heavily in our customer base. Yeah, so this was on the exports side. On the domestic front, we have bagged an order for our entire, again, transmission assembly engine parts for a 400cc Italian motorbike, which is being launched in India. Again, we cannot name, but this again we will be single source. And as you understand, we have this niche or a command in premium motorcycles, KTM, BMW, Kawasaki, TVS, all are our customers. So similarly, any new company wanting to launch a high-end bike for gears, good or bad, they come to us. So that is how we're able to add justice to the price. Escorts Kubota again is a customer we are working. Escorts Kubota, the merger happened, and we were working with Kubota always. So Escorts Kubota also we were working, but we have now started some new projects on Harvester Combine and SOPs next year. So we're adding customers in domestic and exports as well. Apart from this, there is one major project which is under discussion, which is again, if I can term it, a game-changing project for us. If it happens, it is still in advanced discussions. We are right now, passenger cars, we are working through ZF. And again, through that confidence ZF gave us, one of the car company, again, a luxury car manufacturer, has approached us to supply parts directly to them, again, to their electric vehicle platform. And this is something which we cannot divulge much details of the products, but it will go in electric vehicle, it will be high volume, and it will be directly to the customer. And we're very confident. It is an advanced discussion. Maybe by next call or maybe in 6 months, we'll give you an update about this. But we're working really hard in terms of getting this project. Definitely to say, when we are having so much new projections and customers coming in, we need to again invest. And we will be pleased to inform you that this will come later. We have already started not digging, but making way for a new plant. So as you know, land is not a problem. So whatever plant we built last year, we have already consumed. We don't have much space. So the new projects, whatever coming in, these projects are under discussion, not the ones I shared with you in the slide. We are putting up a plant, again, of the same size and type, and this should be functional commission maybe by March or April, at least the building, and then the deployment of capital or the equipments will happen simultaneously. And we already have confirmed business orders and schedules because our existing customers are also increasing. So there also we have capacity demands and new are also coming in. So this is in line with that. This is the actual site photograph of the new plant which we are building, which will be maybe bigger than the plant what we built last year. So right now within that Gajrola plant, we can say we have around 3 plants for machining, and this will be the 4th plant. So had it been a company with multiple locations, we would have been 5 different plants, but this is a multiple plants within a plant. That is how it helps us to use our land judiciously. Last slide, it's already 3:30. So whatever projections we are showing you, all these numbers, it's not in here. It is all planned. So see, right now, this is how the penetration of application looks like. So this was last year, two-wheelers was 49%, electric mobility or scooters were 2%, 19, and this is how it is. This is how the pie will change. You see, three-wheeler is a dying market. 2017, 18, this was around 18% of our turnover, and now by next year it will be only 4%. And we are de-risking ourselves. Commercial trucks is increasing. This is what we have projected. And you see here, passenger cars, we are now increasing our penetration. And good thing is all of these projects, what we are picking, are electric, hybrid, and even if they're not electric or hybrid, these are chassis parts. What it means that the car platform, the chassis will not change if you put an engine in it or a battery in it. So our parts will still be there. So it's kind of agnostic. And on the electric scooter as well, this is increasing. And two-wheeler dominance is not reducing, but since other shares are increasing, so it's balancing the industry-specific risk. Definitely a caveat, this is just to project. This is basis the discussions or understanding of the market we have. It's not a fixed line that this is how it will happen. So you have to keep in mind that it is a forward-looking statement and it should not be taken into consideration for your decision with the company's value. Yeah, so this is it. I think I tried to cover majority of an updates and the company. Yeah. So Shagun, now I think I will stop sharing my screen and we can move to the questions. Yeah. Thank you.
Thank you, sir. So since we have walked through the financial performance as well as the company performance overall, we can now begin with our question and answer session. I think we'll first start with the pre-registered questions that we have received from our shareholders and investors that have joined in today. The first questions can we have from Mr. Manish Gupta. Manglaji, please unmute Mr. Manish Gupta.
Hello.
Manish Gupta, Manglaji, is Manish Gupta there?
You can speak now.
Yes, can you hear me?
Yes.
Yeah.
Okay, great. Thank you for a very elaborate presentation. A lot of queries were answered. I just have one question, which is a clarification from the last call. So, during the last call, we had mentioned that our debtor days are very high because of the transit time it takes for the goods to reach Europe. I think sir mentioned that it takes about 75 odd days and the customers pay us in 87 days. So essentially the debtor days is not much. I wanted to check that, do we recognize revenue when goods leave our factory, or do we recognize revenue when goods are taken into custody by the customers? That's the first question. And a follow-up to that question is that our inventory days are almost 230 days. So can you explain why we need to carry so much of inventory in our business model? Thank you. These were the two questions I had.
Thank you, Manish, for your question. I'll answer your both the questions separately. First of all, on debtor days, accounting, as for accounting practices, in fact, we have to recognize the sale as and when the ownership is transferred. So it's a mixed bag. So many of the customers, we have to give them the material on FOB Indian ports like Delhi or Mumbai. Many of the customers where we have to give the product to their destinations wherever they are, whether it's Europe or Japan. So based upon that, we recognize the sales. If we hand over the product to their logistic partner in Delhi. So the moment it is handed over, sale is recognized. And if we have to really hand over the product at the gate, eventually we have no such system to physically check whether material has reached this gate or not. So we have to subtract at least 60 days, 70 days of transit time, and then we add to the sale. So this is the practice which we are doing for all the customers. But majority of our business is actually FOB Indian ports. So that's the reason the transit time is actually the debtor days are generally higher. But that's very clear that all our customers, they have normally terms from 60 days from the material, what we call it, bill of lading of BL. So eventually if BL is on a FOB basis, so obviously within 60 days we get the payment. But eventually, customer, because we keep on shipping every month, every day, every week, but customer has to pay once a month only. So this all adds to about 90 to 100 days. I think now the data days are reduced now. 66. So now it's now 66 days it has come. Because since domestic market is also little increasing, the domestic market debtors are, of course, transit times are very less. So this is, and I feel we are best in class in terms of the debtor management, and our debtors are not really long. Regarding inventories, our business model is that we are a premium segment niche market product company where we have a very huge variety of parts. And there are certain parts which are, we have to supply them few months a year. There are few certain parts where we have to supply the parts on a monthly to monthly basis. And since we are making many assemblies, the MOQs of the child parts are very heavy. So that's the reason we have to keep the inventories high. But our costing takes care of all this. When we do the product costing, we know that, in exports, they have seasonal businesses. They don't produce throughout the year uniformly like we do in India. In Europe, they will produce almost 70% of the production in 4 months and 30% of production in the remaining 8 months. Or maybe 5 months they will do 60-70%, 30% they will do in the remaining 6-7%. But we have to keep producing on a regular basis because these fluctuations we can't really handle in our manufacturing scenario. In India, we work all this throughout the year on the same basis. So that's the reason we have to always keep our inventories. When there is a peak production, so we sell from our stocks. When there are lean months, we keep producing and keeping it. This is how the inventory also has we have to take care. The inventory is work in progress also, a little bit of finished goods also, and of course, some raw materials also. So I hope I have been able to clarify your answer, question. And if there is any further comment, please let me know. Hello?
Yeah, thank you, Mr. Gupta. I hope we were able to resolve the queries.
Yeah.
So,
Mr. Manish has any answer? Just ask. Mr. Manish, you have any query further or it's clear?
Actually, I do, sir. Just a follow up and on this and 2 other small questions. The first one is that, as you grow as a company, would the inventory days reduce because then you can have longer runs, or would the inventory days always stay high in our business model?
Our business model by and by is, if you really see our EBITDA margins, our profit margins are higher because our business model is such. Because if we go into mass market, then obviously we keep our numbers on inventory days and are very low. But then eventually you lose on the margins. So for us, the better is to have a margin. So inventory days, as far as my books are, because even if I am keeping the inventories and all the financial costs I am bearing on my books, and even then if I am handling margin, EBITDA margin over 20%, so I feel it is the best business case. So inventory is I will say inventory not a bad thing for us. It is our business need.
Okay, very
Because
clear,
our
sir.
business model is such that we have created our niche market segment where there are not many players. That's the reason we are getting better advantage. Because otherwise, if you really see the auto component manufacturers in India, I don't feel there are any companies who are having. There are many companies who are having EBITDA margins 15-20% or so. Normally, people work 12, 13, 14% of margin. This is our business model. So I'll say this is the best case in our current scenario.
Okay, very clear, sir. So second question is that Europe is about 58% of our revenue, but my sense is some of our product that we are shipping to Europe from Europe might be getting shipped to other parts of the world. So would you be able to split the revenue of how much is our actual exposure to Europe?
As you yourself said, that Europe is not producing for the domestic or the European consumption. Europe is producing for the rest of the world. And, these all are big brands like BMW or KTM or all the. Frankly speaking, I don't have much data available handy with me, but that is very clear. Europe is not producing much for Europe. Europe is producing for the rest of the world. And I personally feel for Europe, the biggest market is US, because I know a particular customer for us who is BRP Rotex. BRP Rotex, whatever vehicles they are producing in the world, they consume only 12% in Europe, 88% sells to outside Europe. So this is the kind of scenario. So, and US, Canada, Australia, they are very big markets for this customer BRP Rotex. And same is for these premium motorcycle manufacturers like KTM or BMW or so. So eventually, I don't have the right exact data for the other customers, but yes, Europe is a feeder for all big continents, including India. Many of the products we sell it to Austria or to Germany. They get assembled and shipped back to India, and they are being sold in India by some of the manufacturers. So this is how Europe works. And not only for our product, generally for all other products as well.
Excellent. Thank you so much, sir. Appreciate the opportunity.
Yeah, thank you, Manish. Yeah, maybe next, you can unmute Mr. Niraj Thakur. Neeraj Thakur.
Manglaji, please unmute Mr. Neeraj Thakur. Yes.
Mr. Neeraj.
He is
Neeraj is not there.
Then Mr. Sunil Kothari.
Mr. Sunil Kothari, Manglaji.
Thanks for the opportunity, sir.
Yeah, hi.
Thank you very much, sir. Such a nice and very detailed presentation, and it gives us proud for the customers for which you are working. It's a real Indian manufacturing showcasing their capability. Commendable, sir. Sir, my question is, you have seen the very toughest time of the auto component industry, and then you turn around this company. My point to convey is, because we are in an industry where you require high inventory, high debtor days, should we not think about reducing debt and removing this interest burden? Because we already reach 5-6 crore per month per quarter interest cost. So what's your plan? What's your thought process? You can take.
Sunilji, I already replied you while I was speaking to Mr. Manish Gupta. In fact, debtors or high inventories are not any inefficiencies in our system or any such delayed payments from our customers. Our business model is such that we are carrying higher inventories and we are having higher debtors because we are exporters. If you see any of the balance sheet, I think even in exporters, we are one of the best in class for the exporting companies. If we are shipping the goods to an overseas destination and you are able to maintain debtors at 60, 70, 80 days, So you can also understand which customer will give you payment until he sees the color of the material at his factory. So eventually, you also understand, we are in North India. It takes 15 days for goods to reach at the seaport and takes another 30-40 days to reach at the customer's destination. Another big 10 days for inland haulage in European companies. So about 60 days when there is a transit time and we get payments in 66, 70 days. So frankly speaking, it's not a negative, rather it is a positive thing. And as far as inventory is there, I already clarified that inventory is our business needs.
My worry is
our costing takes
your
care.
data days. My sir worry is we are not a company which will stop at say 500 crores, 600 crores. The way you are getting customer, new products, the way you are developing new projects. I think if we think about say like for 5-10 years, we'll be doing definitely really well in terms of your products or innovation, your acceptance. So my point to convey is why should we not remove this debt and reduce or maybe remove this interest burden? That is my concern, sir. I am not worried about
How we can remove the debt?
Either right
customer will pay us advance payment.
What is advance payment? Yes, sir. Your customer
You cannot remove the debt. You cannot remove the debt because debt is the business need. Do you feel that BMW will give us advance money? Okay, now you are a big company, so now we start paying you advance payment. So that is a business need because no customer works, no supplier works until credit because we also get credit. Because if we purchase steel from steel mill, so tomorrow steel mill also will say that why do you have the debt? You pay us in advance. So business cycle always, the entire world works on debt solely. My supplier will give me on credit and I have to pass on the credit to my customer. So this is it. I feel this is two hypothetical question being raised by you.
Sir, my question is, are you okay with this type of interest burden quarterly?
But interest burden, I do not think it is something which.
So when you are having debt, the interest will be there and our finance cost is 4%.
But the burden, when you say all ratios are encouraging, I mean, are we not able to get your question?
No, sir, my point is if we can either dilute some equity or maybe right issue and if we can reduce debt, so it will give us comfort to invest for future growth.
Fundraising.
I feel we are discussing now other topics, equity, diluting and all or fundraising. They are very, very complex topics which managements have to really consider.
Fine, sir.
And of course, they are not to be discussed in such forums where we are just discussing our performance. These are strategic decisions.
Yeah.
And raising funds or raising equities or reducing all things, these are strategic decisions. They are management decisions. So I think the purpose of this meeting is just to discuss our performance or how we are doing. Strategic decisions, of course, as and when the time will come, we'll discuss this also.
So my last question is,
Sorry.
yes, sir. My last question is on the way we are getting new customer and new products. What will be the capex plan if you can share with us for current year, whatever target we have and for next year?
It will, one thing is very clear that we are a capital intensive industry.
Yeah.
Each and every capex has to justify the investment decisions, and this management always takes decisions which are in line with our business forecast. So eventually, if we really are growing 30% year on year for last 3-4 years, and if we maintain these trends of growth, obviously capex also has to be in line with that, because eventually, if we feel that we can grow 30% year on year without any capex, it means until now we are inefficiently or underutilized. Our resources are always very optimum utilized, and for future growth story, we have to keep on increasing capital expenditures. But of course, I can't give you numbers right now for futures, but this will be doing full justification with our expansion plans. Because like Prab has already shared, new projects we have bagged and many new advanced discussions are happening. Eventually, if those discussions happen, if materialize and the new project start, where to make those capex, and it will be in line with our growth projections and in line with our past performances.
Great, sir. Thanks a lot, and congratulations again for such a well.
Thank you, Sunil. Thanks for
Thank you.
asking questions. Now maybe we call next Mr. Sahil Sharma.
Manglaji, please unmute Mr. Sahil Sharma.
Mr. Sahil.
Sahil Sharma, Mr. Sahil Sharma.
He has not joined.
No, not joined. Sahil Sharma ji not joined.
Then Mr. Anirudh Shetty. I think
Yeah, Mr. Anirudh Shetty.
I think they were both from Solidarity. So Mr. Manish Gupta was already there.
Yeah.
So Mr. Anirudh Shetty, if there is any question, so maybe you can answer this. Yeah.
Yes, sir. I had a few questions. Thanks for the opportunity. So just a follow-up on the last person's question. We have very strong visibility on growth, and the opportunity presents itself. We'd like to invest in capex, which also would require some debt. So just want to understand, from a what level of debt, and if I use say net debt to EBITDA as proxy, would you guys be comfortable with maintaining, and beyond which you guys hello.
This is cracking. I think there's some background noise.
I think it's coming from some other line. I don't know.
Manglaji.
Yeah. Yes, Mr. Shetty, you have to, sorry, you have to repeat again because there was so much of noise. Yeah. Phone को mute कर दिए. Mr. Shetty को unmute करो.
Manglaji.
Yes, ma'am.
Sonal, please unmute Mr. Anirudh Shetty and you have to mute yourself.
Okay.
Yeah, because you are, so you have to mute yourself and unmute Mr. Shetty. Yeah.
Thank you. Yeah. Yes, Mr. Shetty. Sorry
Okay.
for the disturbance.
No problem at all. Am I audible right now?
Yes.
Yes, I saw.
Great. Sir, I actually just had a follow-up question and another question that I'd like to ask. So, the last person touched upon this, the growth opportunity and the need to invest in capex, which also would require debt, to be taken. So, is there any debt metric that we would be comfortable with? And if I say I use net debt to EBITDA as a proxy to that, is there any number that we have in mind that up to which we'll be comfortable with, and beyond that we would probably look for other means to kind of grow the business, and so just wanted your sense on what kind of leverage would you guys be comfortable with if you have a number.
I will tell you, first of all, if you really see very traditional financing options, normally the foremost and most commonly is debt to equity 1:1.5. Okay. Until now, we have never reached even debt to equity is 1:1.5. So we still have lots and lots of cushions over there. One thing is there, we are continuously raising debts, but we are continuously repaying also. So net debt addition to the books is very, very low. And the capital reserves go much higher than the debt. So actually, debt equity ratio, we are still not able to breach. Aratha, what is our debt equity ratio now?
0.9.
I think it is little less than 1, or it is still little less than 1. And if you really see our equity reserve, can you?
Total debt, long-term debt.
Long-term
But I think this
0.9 is
EBITDA to debt margin is around 2.7.
Yeah, 2%.
Anything below 3.7
is always there.
comfortable. But
Actually, we still have lots and lots of cushion. Even in debt equity, we have a lot of cushion. Then EBITDA to the debt margins, like Rob has explained to you, we are at 2.7. So that way, actually, we still have, our balance sheet is not very heavily loaded for the long-term debts.
And to answer you on the second aspect, debt could have been pinching if the turnover was not growing. I hope you can understand whatever projections we are given. I believe we will be surpassing it. Maybe the 500 crore journey can happen sooner because it is all contributing to a higher contribution to sales. And as some of the other person asked, debt in terms of percentage of the interest cost, now we are A minus, so that whatever new debt is coming, these are very attractive rates. And whatever debt is being deployed, it is being deployed judiciously for only projects which have confirmed business scenarios. For example, I explained in the presentation for ZF, we deployed for project 1, and now we have 6 active projects from them, and most of them are having, let's say, some equipments being shared by all. For some, we have to deploy certain equipments. So it is not that whatever debt is coming, it is coming for a business which might come in 3 years. Business is already there. Debt is being raised to fulfill that commitment or demand what we have. And it is all about making sure that whatever you're investing is helping you achieve that overall number, and which is we are comfortable given the projections we have.
I'll add what Prabhat told. Again, there is, as an investor, I know that investors always have little hesitation in accepting debt. There are 2 kind of debt models prevailing in the industry. Many industries will invest, they will create the plant and machinery, and then they will start hunting for the business. Now, in this case, if there is a time lag between your investments and you getting the business, that time lag really kills the company's financial performance. In our company's case, RACL, we typically invest only when we got the business. It is egg or chicken. So we first get the business, then we invest. So for us, our investments are always assured by the business. Because imagine a situation that we raise 100 crores, create a plant and machinery, create a good facility, and then we approach the customers, hey, look, please give us business. Now the customer will feel, oh, this supplier has already invested in a free capacity, and then he will start dictating terms to us. We don't work like this. Our business model is we first get the business, create the samples from our existing facility, and then as and when the ramp up happens, we invest. So that way our investments are always assured. There are no risks. Although no business can be totally risk-free, but yes, our risk element is much lower. So this is what we call it a judicious and justifiable investment decisions. I hope I have been able to clarify your answer.
Yes, sir, absolutely. I just wanted to recheck though. You had mentioned that the finance cost has improved for you all. So did you all mention 4%? I didn't hear that correctly.
No, it contains a addition of 300 lakhs on account of restatement of.
No, interest cost.
Interest
around 4.1%.
It's around 4%.
4.1%.
Net to balance sheet.
And again, I think it is best in class.
Yeah. And this is basically we've taken foreign currency loan, is it? That it's
normally it is our long-term debts are generally rupee loans. Because in this volatile currency markets, it's always better to have.
4 is both short and long. Obviously, this is an average, right?
Yeah.
So long will be higher. Short term is, let's say, working capital finance, which is less cheaper. I mean, it is less expensive.
more cheaper. Right.
Yeah, in totality, around 4.5% to the balance sheet.
4% is the net finance cost carried to the balance sheet, which include each and everything.
Got it. So you had, in the past, I think we had mentioned the scope for improvement in asset turns. Our gross fixed asset turns is, if I exclude the capital work in progress, is about 1.2 times in 2022. Where do you see this number settling at once, we reach a more steady state kind of, stage of growth? And what is the number one can work with?
I will say our short-term or mid-term goal is that we should have at least 2. And long term should be 2.5 or so. But yes, this is aspiration. So, but definitely 2 is, one thing is there. We are gear manufacturer. It is a capital intensive product. So we can't really get very, very high asset turnovers. But yes, 2 is our benchmark.
Okay. And this 2 is basically once we reach a more optimum capacity utilization, and or is there some other driver to get to 2 and then 2.5?
No, actually, in this, the major happens, as I was explaining in previous question also, that we have all the facilities to produce sample parts, and we are having a fully integrated setup. Each and every damn technology is in our company. So whenever new businesses are allotted, so some of the investments we have to make for additional capacities. Some of the existing capacities which were lying little underutilized or little unutilized, they will start getting utilized. So what we call it capex balancing. So this capex balancing will really help us to increase our asset turnover.
And to add, I think this is for general know-how that whatever we deploy doesn't mean that it will generate turnover. For example, for a project, even washing of the parts, that machine is more expensive than most of the people's entire plant and asset, because that will not help me generate a higher turnover. But if I do not have it, I cannot sell that product to my customer because my customer allows 0.02 mg as a contamination or dust on the part. Similarly, we invested a few years ago in forging. So it helps us to improve our supply chain. It helps us to reduce our raw material cost, but it doesn't mean it will help us in increasing the turnover. So you measure fixed asset to sales, thinking that whatever we are investing will help in creating a higher turnover. It is not true always. It also helps us to improve efficiency, improve profitability, because you all see only the what you call
the top line,
but these margins, when you keep asking us why are they so high, the reason is we invest a lot of things in improving efficiency. We invest a lot of in quality, in automation of checking, so that we reduce manpower, we reduce unwanted wastage of, let's say, movement by putting in automations. So it has to be seen in the entire context.
Yeah, and to add what brother said, one more thing. Our plant is also now almost 35 years old. So we have to invest a lot on replacement of the old machinery, repair maintenance of our old technologies, upgradation of technologies, modernization, and of course, creating new capacities. So many times when we invest on replacement of old plant and machinery, so you have to immediately invest. So the asset turnover will go a little low. But as and when those new equipment with high technologies start working, so they will reduce your operating costs. So it may not add the top line, but it will improve your bottom line, because the old technology equipment, they were power guzzlers, they were oil guzzlers. Like, to give you an example, we had certain gear cutting machines which were using maybe 300-400 liters of oil per month. And maybe if I take a 100 rupees a liter of oil, so around 40,000 of oil was being used. Now we have replaced those machines with new technologies, which are dry machines, no oils. So it's a straight saving. So it will not add to the top line, but it will improve your bottom line because it is reducing your operating costs. But those technologies are expensive, so you have to eventually invest on those high-cost technologies. End of the day, important for any business is the bottom line. Because I tell you, you produce 100 crores or 1,000 crores. If you earn 20% on 100 crores and 5% on 1,000 crores, I think producing 100 crores and doing 20% is more better. So, but as a management, we have to always draw a balance. Obviously, top line is also important, but end of the day, it is bottom line which is really mattering to all the stakeholders, including our bankers, including our employees, and of course, shareholders.
Fair point, sir.
I hope it is clear.
Very clear, sir. Thank you so much.
Okay, yeah, thank you. So, if any registered,
Yes.
then maybe there were some questions.
So I've already answered those questions on chat.
So, Mr. SP Mittal, Satyaprakash Mittal. Sonal, if you can unmute Mr. Satyaprakash Mittal. He's not there. No. Can we unmute Yogansh Jaswani? Mr. Yogansh Jaswani. Sonal?
No, ma'am, he's not here.
Yogansh Jaswani is there, Sonal? Please unmute him.
Just a second.
Am I audible, ma'am?
Yes.
Yes.
Yeah. Thank you for the opportunity, sir, and thank you, Prabhi, for such an elaborate presentation. It's so nice to see all the developments and the new project wins that you just shared with us. So most of the questions have been answered. I'll just stick with the few follow-ups or clarifications that I wanted. Prabh, sir, you mentioned that we have a 70% utilization. Did you mean for the new capacity that we have set up, or is it the overall capacity utilization that you shared in your presentation?
It was for the new.
Overall, definitely we operate around 75 efficiency, but this new one, when I say 70, let's say I deployed 100 hours of total machining available, right? So let's say 70 hours I was able to make products out of it, and 30 is losses or spare capacity. And this ideally 70 should have been 50 or 40 because we deployed this for one project. But just I explained you that the second project, which complements most of the same equipment, we were able to load that. So for the month of what we ended November, we used around 70 hours of 100 if we deployed. So that is how we calculate that.
Okay, understood. So secondly, you also mentioned in your presentation that the export mix in terms of the regions between Europe, Asia, and America is gonna look different from what it was last year. So could you share some sense as to what that could be?
So it was 70-30, I think. Now it should be 65-35, but it is very dynamic. It changes, and thanks to dollar, it always fluctuates. But
This is export domestic. This is export domestic.
Export domestic.
Yeah.
No, I'm asking about exports, sir. The breakup in export. You said Europe.
See, in North America, direct market for us will remain same. We do not have any new projects. Asia Pacific, yes, it might be. Let's say Asia Pacific also has China and Thailand. So some new projects, Japan, of course, some new projects have started. It should increase a bit, and Europe should remain similar because when we are growing in all areas, right? So that way it should not change much. But I was just making a comment that it is not the recent numbers what we have.
Okay.
So that was.
And so, like you mentioned, the couple of new project wins that we have had. So, have you been able to work out on the capex requirement that we need, say, in FY24 and the remaining part of FY23?
We will come back to you on that in terms of right now, since this is for the overlooking for this year, and that I think we divulged in last year as well. Whatever capex we need to make, I think that number is public for financial year, which is starting next year. I think next con call will be a better number because then we would have a better understanding of how the capex would look like. It will be premature to answer now.
And secondly, all such decisions first have to be approved by board of directors. Only then it can be shared on the public domain. So for the current year, everything is in place as planned. For next year, of course, in due course of time. First, the board of directors have to approve it, then eventually it will be shared. Thank you. So now you can invite Mr. Rajat Vora.
Okay. Sonal, please unmute Mr. Rajat Vora.
Hello. Can you hear me?
Yes, Mr. Vora.
Okay, so just wanted to understand now with regards to the schedules that you work with your clients. So from the concept development till the production starts. So it takes usually around 1.5 to 2 years, if I'm not mistaken. Am I right?
Yeah.
Exactly. You have yes, you are 100%.
If there is no COVID in between.
No, that is true. Okay, so just I mean, if I look at the other listed players, so it's kind of a mix where Endurance is also doing some bit of work. In this area itself to the Europe. And I just wanted to understand, the maintenance of your operating margins, how will you be able to, sustain, if I can, ask you, that is one. And you had mentioned in your earlier call, I had gone through the transcript that your share is going to increase as you are, you are having 2 or 3 major, tie-ups with ZF and Man Group. Now, if at all, let's say there's a slowdown within that group itself, is it going to have an impact significantly, or that is manageable as you have had a relationship over the last decade or so?
Mr. Vara, I'll answer your question. First of all, if you really see our business model, 65% corporate strategy, we always say that no customer should be more than 20% of our top line.
Correct.
So eventually, imagine that if I will not name any of the customers, but any customer, if he drops, even if he drops 50%, in our balance sheet will be only 10% of the top line. But you can also imagine they are global brands, so they will never decline by 50%. Decline will be 10%, 20%, 5% here or there. So 20%, if I say normal decline, my hit is on balance top line is 4%. So 4% can be managed very easily. But
got it.
Eventually, there is one thing, and secondly, if you really see our customer list, we have almost 20 active customers. Some decline, some grow also. So they take care of each other.
Right.
There is one more business strategy that we never keep on working with the existing customers, and we never keep on hunting for new customers. 20% growth which we are maintaining, our typical is around 10-15% should come from existing customer, 10-15% should come from the new customers. So this is how this balance really works. And for the last 6, 7, 8 years, it has really worked very well. And I hope the same trend will continue for future. So these are the operational analysts are always there, but they are being dedicated to this practice.
Okay. And if I may ask, another question is with regards to your exposure on the Europe side. So in terms of your, how do you basically, hedge it, or, with regards to your, sourcing, are you sourcing raw materials from domestic, or, is it basically from the overseas also?
The raw materials are almost 95% are domestic only.
Okay. And with regards to your, since 70% almost is from exports. So, I mean, can you please elaborate to a certain extent, the hedging and how you do it?
Again, I will tell you, first of all, we have a natural hedge because most of our receivables we are discounting from the banks. Within the same month, we sell our invoice and the banks give us the money. So now gain or loss has to be taken by the bank. We are totally safe. Now, secondly, with our customers also, we have foreign exchange and raw material indexation in many cases. So even if the foreign exchange goes topsy-turvy, so we get compensated. But yes, it is other way also. If foreign exchange goes other way, so customer also will get the advantage. So this way, our hedge is also there. First of all, our immediate receivables are hedged by the banks because I think 90% of our export revenue is discounted. Okay, so we do not carry any of the risk to our balance sheet. Month-on-month basis, we get the money. And for the pricing, for long-term effects, as we have the indexation. That way we are safe.
Okay, got it. Just one more thing. With regards to...
There is a lot of disturbance at your end.
Just hold on.
You can email us if something is...
Yeah, you can write us your
because we
query.
also have to keep a track on that.
Yeah, there's a lot of noise, background noise.
And
I'm muted.
yeah, thank you.
Okay. I mean, one last question, if possible. With regards to your, ZF and MAN trucks, you said that the production had started in June 2022. I mean, the production was already started in February 2022. and SOP will start in June. So has it is it on on the course?
It is right
I
on
think-
course, and rather it is progressing more than the anticipation.
No, but I think this was covered in my
This was
presentation.
covered in
right?
earlier presentation
I
also.
think you joined
Okay,
late.
Yeah.
Products are either on time or before time.
Got it.
Thank you. Thank you.
Thank you so much.
I think you can unmute Mr. Nirvana.
Mr. Nirvana Laha. Sonal, can you please unmute Mr. Nirvana Laha?
Yeah, hi, thank you so much. Am I audible?
Yes.
Yeah, great. First of all, thank you so much for a lovely presentation. I mean, presentations usually are run of the mill, but this is something that an investor really enjoys attending. So thank you so much for that. My question is,
We do not have any consultants helping us making this. That's why it's more crisp.
So, I'm
that
sure
comment
nobody
is,
from KPMG, huh?
yeah, Prab, that comment is well taken. Really appreciate the quality of the presentation. So my question is,
From KPMG or PwC, they will kill you from. Anyway, please carry on.
yeah, so thank you. So my question is, in terms of EV and power agnostic percentage of top line, I think in the last con call you had said 16% is your goal after a few years total. What is the number right now, if you have it, like in terms of percentage?
We keep on changing the goalpost here. Now we already crossed 20. So
No, I think for this year, when we will close EV, when you say pure EV, right? What will be the contribution?
Yeah, EV and powertrain agnostic together. So I mean powertrain agnostic together. Yeah.
See, we can go application wise in terms of two-wheelers. These are high-end motorcycles, right? 600cc, 1000cc.
Yeah.
We do not see them turning into electric overnight. So we consider this to be safe. When I say safe, maybe 5-10 years. I don't know after that. Then in terms of commercial trucks and vehicles, again, we do not see that happening in near time. And this off-highway agricultural, again, are, let's say, not too much electric dependent. So, and whatever we are doing I don't have the ready number as of now, but we can email it to you, what exactly is it. But as a general guideline, three-wheeler is definitely one of the business which was purely susceptible to risk because it would have just shut down overnight. But even that 3-4% of a turnover of 300 crore, 350 crore is a good number. It is growing. On the total pie, it looks down, but it's still growing in terms of that. Not growing, but at least it's stable. And apart from that, most of even the passenger cars, new projects are electric, hybrid, and yeah. So there is not so much of exposure to parts which will be not useful in the mobility in coming years.
Okay, got it. So in terms of your new customers, MAN Trucks, ZF and CF Moto, can you share with us what percentage of this quarter revenues came from these new customers?
That number we don't share. We do not share customer specific percentages. It's treated as confidential data.
Okay, no, I'm not asking actually customer specific. So are you in a position to share new customers? What is the percentage? Just as a, just to see like how much is coming from what you classify
On the
as new.
quarter, I think in
10%.
yeah,
Around 8-9%.
maybe less than 8%. Out of 90 crores, if we did a sale, maybe
CF Moto.
around CF is not new. That is
I did this year. Okay,
no, this quarter, if we say, because they're I think interested
so
for
is
ZF
a part of this?
ZF Man maybe. That will be 5-6%, but yeah, not more than 8%.
Less than 10 at least. Yeah.
Okay, and
It's
the corresponding
now keep adding.
right, and the corresponding number last quarter was how much? So the growth has been how much?
Obviously, it was hardly anything. Last year you are saying, or the first quarter of this year?
No, first quarter.
First quarter
was the second quarter.
First quarter was very nominal. So maybe it was 2-3%. This time it will become 7-8%. So this is now. But if you see the last year, it was almost zero.
Right. Okay, so coming to the domestic two-wheeler EV market, so we have heard that two-wheeler EVs, because they are silent, the gear, the precisioning of the gears, etc., need to be even better. So is that right? First of all, is that understanding right? And how do you see the domestic EV market, two-wheeler EV market for us? Are we like our customers not appreciative of our quality and therefore price, or is it something that we might have a role to play, a big role to play?
I'll answer you. First of all, the domestic EV scooter market is still, I will say, into the establishment phase, although they have started doing 15,000-20,000 numbers cumulative in a month. But they are generally very low-end scooters, very low power. If we compare to a fuel scooter, it is not even 100 cc. So technically, power-wise or the length of means the single charge usage, although they claim 70, 80, 90 kilometers, but eventually it doesn't happen. But they are very, very small scooters. So obviously, in those kind of applications, much of these gears and all such are not really required. But give us a couple of months, we'll share some information with you. We are already in advanced stage with some good EV maker. So once that situation comes, we will share with you. But otherwise, this current domestic market is not focusing on high power electric scooters. They are generally low power electric scooter. Target customers are who are driving 10, 20 kilometers a day, or what you call it, those metro or these kind of means the kind of the small service providers where they can do frequent charging. But they are all low-end scooters. So eventually market has to mature. If you really see, even in the fuel bikes, demand for smaller bikes is going down each year, and aspirations for bigger bikes is increasing. Reason, India has a growing middle class population. Now people no more look for the 100 cc or 125 cc scooter or a motorcycle. They have started buying KTMs or Dukes or BMWs or Apaches or Splendors of 200 cc and above. Now, and the same will happen in EV. These smaller scooters of this, I will not name any manufacturer of the scooters, but they are not for the aspirational people. So eventually, in those, we are not looking for our product to enter. But yes, as I explained you, we will share with you some information on a domestic EV manufacturer, maybe next quarter or so.
Okay, great. Looking forward to that. So last question from my side. So with our precision machining capability, I saw in the annual report, I think you had mentioned that industrial goods was 3%. So we have now an anchor customer like ZF for the auto industry, which is giving us exposure to multiple global OEMs. So how do you see the industrial goods segment? Because for industrial gear making also same kind of capabilities that we already possess will be required, right? So does the company have a roadmap for the industrial segment?
Yeah, I will be actually giving you a very honest answer. Our actually hands are so badly bogged down with handling this automotive growth. We are not able to focus on other areas, because fortunate for us that we have actually got huge projections and demands from our existing customers and new customers. So to be very honest, we are not able to increase our focus. So, but believe me, if really we increase focus, we can really increase this segment also. We have very, very good rapport in industrial segment also. In industrial segment, we are working with the top brands of the world. General Electric, GE, can you imagine? GE is our customer. And they are really after us. But they are again very low volume, but very large variety. Pricing is not an issue for them. But we are not to increase our focus because our hands are fully up with the automotive growth. Because for next 2-3 years, we are actually seeing a very huge growth coming in for our automotive business. So that is our main focus area. But yes, eventually your point is well taken. So I'll tell Prab we start focusing on industrial also. Maybe because for industrial, getting additional business is not that big an issue. Issue is to create capacities and then of course handle the variety. Industrial business variety is much higher because volumes in industrial business are very low, but variety is high. Only then we can really increase. But your point is well taken. We'll see if strategy can work out. We'll create some more focus on industrial part. Yeah. Thank you.
Right. The reason I mention is because your products are in the auto segment, which might be cyclical. So this might be able to smoothen out that cyclicality in a little bit. Anyway, last thing from my side, sir.
No, I think, sorry, but if you have more questions, you can please email us because we have to be cognizant of the time as well. But
thanks.
You can type in chat. I can reply there.
All right. Thank you. Thank you so much.
Okay. So
I think that time is also.
If there's any last question by anyone who.
Yeah, if any question, we can.
Any burning question
from the public, yeah.
You may write it on the chat and.
Or maybe a raise of hand will do if somebody is interested. Who has already not asked? Harsh Beria ho gaya tha? Maybe.
Good. Okay, if there are any interested person, if you can chat or you can raise hand, otherwise we can close this meeting.
Okay.
Mr. Milan Vadkar had
Mr. Milan Vadkar.
Yes.
Yeah, we can have one question from him.
Yes, Mr. Vadkar.
Mr. Vadkar, you may.
He is traveling from Bangalore. He cannot travel from
Mass, Sonal, please unmute yourself. Mute yourself.
I think he's not there.
Okay, so we will call it off. So thank you, everyone. We've taken our last question for the day, and we hope we were able to resolve all your queries. In case if you have any other queries remaining, you may please write to us at investor@raclgeartech.com, and we will reply through your emails. I would now hand over the conference to Mr. Singh for his closing comments, sir.
Thank you, investors. Really, it's very encouraging for us to interact with all of you. And thanks for asking very, very intelligent questions from the audience. It really keeps all of us on toes because we have to always be prepared for next quarter's call. So definitely it really puts us under lots of pressure, but of course it's positive pressure. We relish working with you. We relish communicating with you. And all the best to you, and season's greetings. Winter season is ahead, so enjoy good weather and see you next time, maybe end January or first week or second week of February, whenever. Thank you all the people. Thank you stakeholders.
Thank you, everyone. On behalf of RACL Geartech Limited, we conclude this conference call. You may now disconnect your lines. Thank you.